Good evening, everyone. Welcome to Stock Durbar. I will wait another 1 minute for the other participants to join as well. I think we are good to go now. A very good evening, everyone. Welcome to Stock Durbar with William in India. My name is Rashika Kongari, equity research analyst. I am being joined by my colleague Mr. Wakar Khan as well. We'll be both taking your queries in this session. First, in this session, we'll be talking about macro structure of the market structure by looking into Nifty's chart as well as a major sectoral indices as well. Later, we'll move on to your stock specific queries and we'll try to help you out in analyzing the stocks using our O'Neill methodology. Yes, Vishwanath, the session is started. I hope you can hear my voice.
Yeah, Rashika, you're audible.
Okay, thanks, Wakar. Okay, first let's try to analyze the overall market structure, how the market is placed at this current moment. Recent times, that is in the last 2 weeks, we have seen lots of changes in the market, mostly technical front. I can see 2 weeks back, Nifty was trading around the 18,100 level. Everyone in the market was hoping for the market to make a new all-time high, that is above 18,600. However, the times have changed drastically. Within 2 weeks, you can see the fall has happened, the amount of fall which has happened in the markets. So this is the reason it's very important to always be watchful about your portfolio stocks. Anything can happen in the market within 2 sessions. The overall dynamics of the market will change. 2 weeks back, most of the people in the market were discussing about the market making new all-time high. Now the same people have changed their views and they are talking about market Nifty around 16,000, 16,500 levels. So that is how the market view has changed within 2 weeks. So if you have huge positions in the market, it's always advised to look into the market and take decisions based on the price volume action and overall market structure as well. After that is tracking global cues mostly, Nifty was also succumbed to selling pressure. It has breached its 50 and 200 DMS as well recently. That is yesterday only. Nifty closed below its 200 DMA for the first time after breaching that level. That is since July it has traded above 200 DMA, but yesterday it has closed below that level. Today also market had a good opening on the higher side. However, it also reclaimed its 200 DMA for a brief moment. However, a selling pressure again came into the markets and Nifty closed near its day's low. This is happening for the last many sessions. You can see for the last 7 sessions, Nifty has closed in the red. This is the reason we have changed the market status to downtrend as well. That is on Monday, Nifty had a huge gap down, and as the distribution day count was also at the higher end, we changed the market status to downtrend and we exited all of our model portfolio stocks at that particular moment. So from here, we want the Nifty to make a bottom. How do we identify that bottom is as part of our methodology? Nifty, if the Nifty closes in the green, or if the index closes in the upper half of the day's range, we will be considering that as a day one of attempted rally. We would like the Nifty to stay above that level for the next 3 sessions. If that happens, we will be considering that day one low as a bottom for the next couple of weeks. So in such a scenario, if the index stays above that level for 3 consecutive sessions, we'll be changing the market status to rally at it. That is we are saying that market is about to make a rally. If the market, how do we confirm whether the market is in rally? That is, we'll wait for the market to give a good breakout. That is a follow through day. That is a session Nifty closing 1.5% or more on volume higher than the previous session. That indicates price action is very strong. Also, volume action is also very strong. So that is a signal for us to change the market status to confirmed uptrend. Once we are in confirmed uptrend, again we'll be adding stocks to our model portfolio which are breaking out of their base patterns or giving alternative buy points. Until then, we'll be staying sidelines. We'll be waiting for the market to bottom out. Also, you can see Nifty is trading just 0.7% above its 100 DMA. Historically, 100 DMA has been a very good support for the Nifty. However, if that level is also breached in the coming sessions, then we might see huge fall happening in the markets. I think this link is this video is uploaded on the YouTube. I think you can always go to YouTube and check for this Durbar. You will be getting the link as well. Next, I'll move on to the few major indices which will be having a good impact on the overall market. I'll start with the Nifty Bank. That is the index which has the highest weightage in Nifty 50. Nifty Bank has also trading similar to the Nifty index overall. I can see it was trading near its all-time high. It has also made a new all-time high, that is 41,840. Previous high was reclaimed and it traded for a brief moment above that level. However, on the same day, you can see it formed a bearish candle. It closed in the lower near the day's low. This is a typical signal for top formation. Since then, the overall market has deteriorated, and this index has also followed. It also breached its 50 DMA. Good thing about this index is that it is trading above its 200 DMA and 100 DMA. That is a very good sign. It is trading currently off is around 10% from its all-time high. Nifty is also similarly on similar lines. Coming to the few stocks, due to the festive season, many major banks they are trying to increase their customer base, or they are trying to lure customers by giving loans at cheaper rates, and also they are trying to decrease the processing fee. HDFC Bank has done. They are giving home loans at zero processing fee also, and the interest rate is also at industry low interest rate. So they are trying to increase their loan book in the current festive season. Overall, this festive season will definitely have a good consumer spending, which will definitely be positive for banking sector and overall economy as a whole. Direct beneficiaries will be banking sector and FMCG sector, because lots of spending will happen there as well. Overall, this index is slightly trading similar to the Nifty index, but this is trading about 200 EMA. That is a good sign when compared to Nifty, which is trading below its 200 EMA. Other indices, that is Nifty FMCG, I like to point out. Nifty FMCG has been very resilient in this current market. You can see it has moved sideways, and it has also made a new high at this moment. Even though there was a fall of 10% in the overall market, this index is down only 2.8%. This shows the resilient character of Nifty FMCG, because when the overall market is down, FMCG companies will trying to give good support, and with the upcoming festive season, the investors are very bullish on the stocks related to FMCG space. Some of the other macroeconomic pointers that are giving positive signs for the sector are a drop in palm oil prices. Palm oil is used as a major ingredient in a lot of food processing industry, and recently we have seen a 50% drop in the palm oil prices. So stocks like HUL Britannia, which uses palm oil as their raw material, will definitely have good margins. So that this is will be definitely a positive for these stocks going ahead. Uh, there are lots of queries already related to in Nifty and stocks. We'll be trying to definitely will address most of your stock specific queries and your other market specific queries as well. Sahil has a question related to Nifty volumes. I think for the benefit of everyone, I'll try to show. If you open a Nifty chart, this is the normal volume profile you'll be seeing. You can see here clearly for a beginner, mostly they will be thinking that the overall day's trading is similar on the everyday. But however, if you change the scale from log to linear, that is a reason it is showing a similar profile, volume profile. Always you have to keep it in linear scale. Then you'll be getting an idea of how the Nifty volume profile is there on day-to-day range. Currently you can see the fall is happening on the above average lines. This is not a good sign. When the overall index is falling and the volumes is on the higher side, that indicates institutions are exiting the market or big positions are being on the sell side. This is a sign of a distribution happening in the market. Other one more sector I would like to point out is Nifty IT. Nifty IT has been under bearish phase. You can see from the last from the start of this year, from January, the index has been in the downtrend after making a high of nearly 40,000. It is currently trading around 27,000. There are many factors because of which this index has been in the downtrend. However, if you look at the recent 2 weeks or 2 weeks period, which is in the focus of this discussion, you can see this index is also slightly resilient when compared to a Nifty and Nifty Bank, which have been down 10% in the last 2 weeks. This index has been very resilient and it has moved sideways. Even though it is in downtrend, this has been very good resilient in the current dynamics. Overall, uh, Indian market is very resilient when compared to global markets. Globally, the major theme that is happening is rising inflation, starting from US markets, European markets, Asian markets. Everywhere it is a similar theme which is happening, starting from a pandemic, then geopolitical tensions because of Ukraine, Russian countries. Lots of dynamics have changed. Supply chain constraints have increased, due to which Europe has been facing energy crisis. There are many reasons because of which inflation has been on the rising trend globally. Hence, the central banks of respective countries have increasing their interest rates. Whenever interest rates are at higher end, consumer spending will come down because rate of loans, that is rate of interest on the loans will be costlier. Then psychologically, people will not try to take loans. Similar thing will happen to the companies as well. Their cost of debt will also increase. So their capex plans will be postponed mostly. That is the reason high interest rates regime is not very good for the markets, because the growth will be coming down or it will be halted for a brief moment. US Fed has increased rates recently around 300 BPS points in the recent meetings. They're also expected to earn another 75 to 100 BPS in the next two meetings as well. Indian markets have, Indian RBI has also increased the repo rate to the tune of 140 BPS and is expected to increase another 50 BPS in the upcoming meeting. So everywhere, Bank of England has increased their repo rates. Everywhere the theme is similar. So that is the reason the overall market, global markets are under turbulent phase. I'd like to point out another major pointer, and then we'll be moving to the stock specific pairings. This is one chart I found on the internet, which I found very good. This is a chart which talks about depreciation of various currencies against US dollar. US dollar has been very good, resilient, and it has been outperforming other currencies. You can see euro, which has depreciated nearly 15%. The pound has depreciated 20%. Indian rupee has depreciated 8.7%. Japanese yen has depreciated 20%, and the Chinese yuan has depreciated 11%. If you look at overall, if you compare the Indian rupee against other currencies, it is very clear that Indian rupee has been very resilient, and the amount of depreciation is lesser when compared to the other currencies. This shows good strength of Indian economy. One of the major reason is that forex reserves of Indian forex reserves have been at very good levels. RBI is also intervening, and they are spending. They have spent around $100 billion in the recent period to tackle the depreciated rupee, and they have given good support to the rupee. Likewise, we are expected to see another 25 to 30 billion dollars of spending, forex spending, which will give support to the Indian rupee. We have very good forex reserves. Currently, even though after spending $100 billion, forex reserves are around 540 billion dollars. So RBI has good cushion to give support to the rupee in these turbulent times. So there is no need to panic overall. That is a point I wanted to make out. Okay, we'll be moving into stock specific areas now, and Vivek has a question: how do we change from log scale to linear? Vivek, if you are watching this screen, I can see. If you put up the Nifty's chart, first default it will come to log scale. You have to click on the log, it will change to linear. If you click on the linear, it will change to log. Just a left click will do the change. Muhammad Raza has a query, that is, do we need to sell all stocks for the medium term, 6 months to 1 year, or hold to market bridge 16,800? Muhammad, if you are following our portfolio or our emails, we have exited completely our model portfolio stocks, and it is expected our clients also to do the same. That is, we are not finding the market conducive to take fresh positions or to hold the positions, because we are seeing more market on the downside. So it is better to stay in cash in these turbulent times. When Nifty bottoms out, and if the Nifty market status changes to rally item, then you can start accumulating a few stocks, or start taking smaller positions in stocks which are leading their respective sectors. Also, for the stocks specific queries, please be we would like the audience here to post their queries. Do not repeat your queries, because it will be very difficult for us to look out for queries, and it also becomes difficult if we see the similar stock twice or thrice. Okay, I'll start with Renuka Sugar. This stock is currently trading in its stage 3 consolidation base pattern. It is also very resilient in the recent times. Just now we have seen the amount of decline happened in the overall market. However, this stock is trying to break out, even though the overall market dynamics are not good, which is a good sign. That means the stock is outperforming major market. That is the reason its price strength is also very good at 86, and recently its RS line has also hit a blue dot. Technically, you can see when compared to the general market, this is trying to outperform. Number of funds invested in the stock has also increased 20%, which is a very good sign. That is, fresh institutional investors are taking positions. That means big funds are not losing money. Only concern is that its EPS strength is at 52, which is a poor category, which is not a good rating. Overall, we like the market. We like the company to report a good set of numbers in its upcoming quarterly numbers. If that happens, its EPS rating will also improve. We can see last 3 quarters it has reported good set of numbers, but the previous quarters are not so good. That is the reason its EPS uh, is at poor category. If the upcoming quarter, if the company reports good set of numbers, then definitely it will improve. EPS rating will definitely improve. Technically, the stock is good. It is looking very good when compared to other stocks. If you are looking to take a fresh position, now the overall general market is not conducive to take positions. However, if you are holding this stock in your portfolio, you can continue to hold with a tight stop loss, even though if even it's a short-term moving average, that is 21 DMA is 11% from its current market price. That is also far. You can keep type stop loss around 2 to 3% from CMP, and you can ride the upward trend. However, if the trend is broken and if the stock comes down 3 to 4%, then you can exit.
Raj, Vakar, can I take some queries?
Sure, Vakar.
Yeah. Can you give me the chart for Allcargo?
Allcargo, sure.
So overall, if you look at the stock, it's been really resilient. First, we talk from the O'Neill perspective, and then would like to give some small fundamental drivers as well. I mean, even if when the market has been in downtrend, and still the stock has been resilient, the RS line has been moving higher. The stock did provide a good breakout, and after that, it found it kind of retraced, found support near its 21 DMA, and then as you can see near the 21 DMA, the action was kind of strong. If you look at the fall near the 21 DMA, it was on very lower volumes. Look at the volumes, it was low, and when it reclaimed that 200 DMA and started to move higher, that was on higher volume. So that is the kind of action we would like to look at it. And even from the number of funds perspective, we look at it, that's been increasing. Overall, it probably ticks all the boxes from the O'Neill perspective. If we look at it, the EPS strength great at 97. Price strength is fair, but as we look at it, the RS line is moving higher. Even the blue dot is generated. That is new. The RS line is hitting new highs. The buyer demand is really good. The group rank is also good. I mean, why this probably the growth stories probably culminate growth story that is happening within the stock is that because like overall it's been performing well in the last few quarters as well, plus the aspirational targets that has been set out by the Allcargo management as well, like they aspire for a revenue target of around 250 to 300 billion, EBITDA of around 24 to 27 billion rupees by FY26 from the current levels of 200 billion and 15 billion in FY22 for your revenue and your EBITDA, which implies an EBITDA CAGR of 14% over FY22 to 26. So this, how will the growth come in? So the growth will come in majorly by your market share gain, expanding into new geographies and services. So overall, it looks good at the moment. So if we look at it is the largest player in the global LCL space, that is your less than cargo container space, and even it has a market share of around 14%. It operates at around 40,000 ports, and that is also increasing. It's seeing turnaround in its express business, that is Gati. It had acquired Gati some time back, and it's seeing turnaround in that space as well. It acquired it in FY21, a majority holding, and even that's improving. So overall, if you look at the growth story has been probably improving for and gaining momentum for Allcargo at the moment. someone at the moment, why we would not advise an entry or a fresh entry into the stock. One, it's extended from the pivot. Two, if you look at it, first and foremost, the market is in downtrend, so it's not really conducive at the moment. And what William Neal always says, has said in his books, in his articles as well, that 3 out of 4 stocks move with the market. So if the market is currently in that downfall move, it's a downtrend. So we'd like probably the market to come back to confirm uptrend, then probably look for fresh positions into growth and momentum stocks. But if someone is holding the stock and like probably can hold the stock at the moment, and probably can keep a very tight stop loss of near the 21 DMA. So if probably 21 DMA gets breached, and if probably the volumes higher, probably one can move out of the stock. So Mr. Adit has a question that what do you say when you say that the stock is extended from the pivot? So what we say is like you need to uh, probably take a new position in the stock in the range probably of 0 to 5% from the pivot. So if we look at it at this stock, the pivot was around 385.1 as the stock was forming a double bottom base. So I mean the center half becomes the pivot. So if you click on the base, you will get the pivot point as well. So this 385.1 becomes the pivot. So anywhere from the range of 385.1 to up from 0 to 5% from that range is probably the ideal point. That's it. And if you look at this blue line, this is probably becomes that ideal point to probably look at it, and the red becomes your ideal stop loss according to the William O'Neill perspective. That is the 7 to 8% criteria, right? So this is what we were talking about. The other I'd like to talk about is metro brands. So again, yeah, most stock that is probably satisfying all the canceling parameters at the moment. If you look at it, even in the last breakout, it had a power to pivot that is more than 25-30% within a matter of couple of weeks. So even that was really good. And even again, the stock has been resilient. It's just 3% from the pivot, trying to consolidate around its pivot. But I mean, what we always talk about is, I mean, the market structure. So probably if the market structure would have been conducive at the moment, probably the stock would have given a breakout as well. If you look at the results or the EPS and the sales for the last 3 quarters, it's been X. No sound. Raj, am I audible?
Yes, Wakar, you are audible.
Okay, fine. I'll go ahead then. So if you look at the last 3 quarters as well, the sales has been accelerating. Your EPS has been accelerating, and even not just accelerating, it's been in double-digit growth as well. So that's really good for the stock. If you talk about metro brands, what is probably coming into metro brands as a successful brand is mostly because of the efficiently run business model, and it lies in the store economics, which it has a store productivity of 2 times that of Bata, and that too with a healthy profitability as well. The strong brand appeal, healthy portfolio of in-house and third-party brands. So if you go to a metro brands, it has your their in-house brand as well, and as well as the brands as well. Uh, so if you look at the last 6 years for the company, it has added nearly 12. It has added stores at a CAGR of nearly 10 or 12% with a very strong balance sheet, and even the footfalls over the years have improved for the company, which has led to the improvement in your revenue CAGR as well. Your ROC is in the about 20 digits. Even the ROE is 16% at the moment for the stock, which is really good. So everything, if you look at it, it's been working really well for the company. The only problem at the moment is the market structure. So that's the only thing. So new entry at the moment is not advised, but if someone would have bought it at a previous breakout, and is probably holding in the stock can continue to hold the stock and keep probably the 21 DMA line as their stop loss line and continue to trail that along the way.
Uh,
Uh,
Wakar, I'll be taking a few queries now.
okay, no problem, Raj.
Yeah, I'll take Tata Motors, which has been in the news recently as well. Tata Motors, the stock has outperformed in the last 1 year. If you look at the weekly structure, you can see from the lows made in March 2020, it has been in a single journey, that is upward trend. Recently, it has trading in a long consolidation base, starting from December or January 2022. Again, I'll go back to a daily chart. You can see it is currently trading in its stage 2 consolidation base. Uh, Technically, if you see, the technicals have deteriorated mostly because of its underperformance recently. When the overall market was moving higher, this stock has moved nowhere. It has moving sideways and trading near its key moving averages. Currently, it is trading below its moving averages as well, which is a negative sign. You can see a price strength of 34 indicates underperformance when compared to benchmark. EPS strength is lower as well. I can see that is because it has reported not so good numbers. Sales and EPS have not been consistent, and they are not been consistently growing. There is some turbulent times in December quarter and March quarter. Uh, June quarter performance was good. However, we would like at least 3 to 4 consecutive quarters where the growth is a double digit and accelerating numbers. But that has not happened in this company. So the EPS is poor at 27. But a lot of good things are happening in the company. The company is betting big on electric vehicle space. They are the leading car manufacturing in India, and that is electric car manufacturing in India. Recently, that is yesterday, day before yesterday, I think they have announced a most affordable electric car, that is Tata Tiago, with a price less than 10 lakhs. So it has made good headlines, and a lot of there is a lot of optimism around this car being sold in huge numbers. So that if that happens again, the research around that particular price point or the battery involved will definitely improve, and more and more companies will also auto companies will also be spending their research in that particular area, so that more people will be affordable to buy electric cars. At this moment, electric cars are more expensive when compared to petrol or diesel cars. So if the auto companies are able to make these cars below 10 lakh rupees, definitely the sales will improve, and on the pollution front, definitely there will be good impact on the climate as well. Overall, government is also pushing these initiatives so that electric vehicle space will increase. That is both the two-wheeler and four-wheeler space. The companies will also try to uh, allocate some funds towards this research. Definitely, in India, we might see good amount of market share belonging to these electric vehicles. If that happens, Tata will definitely benefit because they are the market leaders. So they will definitely have a beginner's approach, that is a beginner's luck or first movers advantage. Definitely they'll be having. So the markets will definitely incline towards Tata Motors. If that happens again, this stock will definitely come to limelight, and we might see outperformance. However, at this point, this is the stock is being underperformance, and market is also not conducive for fresh investments. The stock is down more than 24%, whereas the Nifty was down 10%. So which is not a good sign. We would like the stocks to resilient, and always keep those stocks which are resilient or leading their sectors in your buy watch list, so that whenever the market turns, towards the bullishness, then these stocks will definitely break out from their base patterns early enough, and they'll be giving good amount of gains. That is 20 to 25% of gains within a quick period. Upendra, we have already discussed about Bank Nifty. I'll be moving to Canfin Homes now. One of the major NBFC company which is involved in distributing loans for house purchases majorly. You can see the price action is completely deteriorated. There is no proper base formation happening in this stock. Uh, when the market was in good dynamics around this area, this stock has come under pressure. Also, selling happened on high volumes, indicating there is some disturbance related to this stock in the market. Majority of the funds, that is big investors, have exited this stock. You can see the number of funds have also declined 52%. That is half of the funds invested in this company have exited their position in this company, which is a bad sign. And recently also you can see the fall is very steep, and the volume is also highly above average. These are bearish signs, weak signs, and these are very big sell signals in a stock. Um, these are the signs which tell us to exit a particular stock. Even though its EPS is strong, EPS doesn't change much, right? The company will report their numbers only on quarter wise. Even though within a 2 month period, the company dynamics might change. You can see in less than 3 weeks, the company share price has come down to nearly 200 points. From 670, it has come down to 470. Not much change has happened on the fundamental front, but the technical front, there has been a lot of changes. That is the reason we would always say, when you are taking a position or initiating a position in a particular company, always look for both fundamental and technicals. But once you have taken position in that, in a company, in a stock, always look for technicals, because they'll be leading indicators. Fundamentals do not change much. They change very rare. By the time the fundamentals change, the company might decline of 40 to 50% easily. So your capital will be at risk if you are waiting for the fundamentals to change. Always look for the technicals when you are holding the stock. If the technicals are pointing sell signals, then please exit those kind of stocks, because whenever the magnitude of loss increases, then the uh, if you want to break even, that is to break even your capital, you need a higher amount of gain, right? uh, it is a mathematical formula, right? If you are losing 10% from 100 rupees, your capital will be 90 rupees. You need around 11% to break even. But if you are losing 20% from 100 rupees, your capital will be at 80 rupees. You for break even, you need 25% of gain. That is from 80 to 100, 25% of gain is required. Again, the loss is more, that is from 100 you move to 50 rupees, that is 50% loss. You need 100% of gain to break even, and it will increase exponentially. If the loss increases, the magnitude of gain required will also increase exponentially. So it's always for better capital management rule is that it's always important to cut short your losses, so that your capital will be at not so much risk. There will be ample of opportunities in the market, and the market is in uptrend. There will be a lot of companies which are giving good breakouts. Always have capital in hand, so that when those opportunities arise, you will be ready to take those opportunities. However, if your capital is eroded, both capital front you are eroded, and psychologically also you are taken hit. So that is not good. We are in the game for the long term, not for the short term, right? You need to make gains in the long term.
Rashikar, Vakar, can I take some
Yeah,
queries?
sure, sure.
Can you give me the chart for GHCL? Yes, so talking about GSCL, I mean, mainly predominantly into the soda ash segment, and even the management commented that probably the soda ash industry is riding the tightness in the global market, and they expect this tightness to continue for the next 18 to 24 months. They don't see any new major capacity additions coming to stream by at least by 2025, and they even seeing demand from the end user industry. The major end user industry is the glass industry, which contributes to around 51% of the top line for the company, and then expecting that segment to grow as well. Even the soda ash prices have remained firm in your July and August as well. But if you look at it from an O'Neill and a technical perspective, on the O'Neill front, it doesn't look that bad. But if you look at it from the base count perspective, the stock was forming a stage 4 cup base. Click on that base will see that it's a stage 4 base, and every time in the earlier stock Darbars, in the pre-wells, in the after hours, we've always said that stage count of 4 or higher have a higher probability of failing, and that's what you can probably see in the stock as well. Little bit of pressure in the market, that is the market going uptrend, under pressure, or a downtrend, and you can probably see the stock not able to break out from the pivot. So anyone who could probably would have been holding the stock can uh, uh, can exit the stock at the moment, or if they want to probably take a little more risk, 1% from here, not probably 200 DMA. I'll say 50. If it reaches the 50 DMA, move out of the stock. If probably entered if just at like around the 488 level, that is probably at the stage 3 breakout. And the other I like to talk about is Vedant Fashion. Again, one of the stock that is showing good momentum. So it's the leading brand that Manevar Mohe. So if you go to wedding fashion and wedding attire, that's probably the ready-made market. That's the go-to at the moment. That probably gives you the easiest brand recall, not just in terms of AdWords and ad commercials, but in terms of the number of stores and the outlets as well. But two things at the can be looked at the stock is like it's probably at the ideal profit booking zone. If you look at I mean the three markers, that the blue, red, and the green. So if someone would have probably bought it near the pivot, it's probably a good time to probably book the stock in strength, and or probably can wait to trail your stop losses to your 21 DMA and move out of the stock. Any new entry into the stock is not advised as it has moved around 23% from the pivot, and it's probably in the ideal profit booking zone at the moment. The other I'll talk about is Cummins India. So talking about Cummins, like it's probably not able to break out, and even from the last base itself, it's been highly volatile, and it's trying to form a new base. At the moment, the stock has breached its 21 and 50 DMA, and probably if someone would be holding the stock, I would probably advise considering the market condition as well. Even if you've been holding it from the prior times, probably move out of the stock at the moment, or if probably because there's no point having deeper stop losses at the moment, because even your the on front the criteria has been deteriorating. So if you look at it from the blue tick perspective as well, post the blue tick, the RS line has been moving lower, which is not a good sign. On the on if you look at the institutional front as well, no major institutions are probably increasing their position into the stock. overall, if we look at it from the management perspective, like and the last quarter results was decent, and the companies seeing like in the industrial segment and in the management expects good demand in the construction, mining, and uh, uh, marine portfolios to continue. But probably a quarter more would be good to see. Like if in the quarter more, in the next quarter, if the company can deliver results and probably the stock can attain some kind of relative strength, and the markets can come back to a confirmed uptrend, then probably the stock can be looked at that moment.
Uh, Thanks, Vakar. I'll be taking few queries now.
Okay, okay, Rashid.
Yeah. Kalpesh has a comment related to the number of stocks we are covering in this stock Durbar. As rightly pointed out, we will not be able to cover all of your stock specific queries. Here we are not trying to cover more number of stocks. We are trying to bring forth our methodology for the users here, so that there will be more. We are trying to educate the forum here, so that they will be able to take their decisions themselves rather than depending on someone else. If you are ready, if you are well aware of any methodology, then you can definitely take buy or sell advisors yourself rather than depending on others. So that is what we try to do on the overall these webinars or other webinars we do apart from the stock Durbar, that is canceling webinars as well. We are trying to educate overall canceling methodology, so that your capital is preserved, and you are ready to take investment yourself, and you are ready to make consistent returns. If you are dependent on anyone for advices, then definitely it will be very difficult, because the two parties there will be two parties involved, right? You and the other party. If the other party makes mistakes, you will definitely make mistake. It's always better to if you are well aware of any methodology, you will be taking a decision, so that the fault other party fault will be taken out of the picture. That is what we are trying to bring here. Coming to the stocks, uh, yeah, there are many stocks. I'll take Gujarat Alkalis. The stock broken out from its stage 3 cup with handle recently in the first week of September. However, because of distribution in the overall market, this stock has also succumbed to profit booking. I can see the stock has retraced back towards its 50 DMA. However, the good part is that the volumes stayed lower, which is a very good sign. Only weak hands are exiting this particular stock, which is a good sign. No much action on the uh, big funds. They have not exited clearly, because by looking at the volume, you'll get an idea. If the market dynamics change, if the market structure improves, definitely this stock will definitely come under radar, and again it will give a chance to take position when the market is in confirmed uptrend, and if it trades in its idle buy range, that is the blue area which is highlighted. Definitely it is a very good stock to add to a model portfolio. Many pointers related to this company are very good. Fundamentally, EPS of 79 is a good rating, because you can see for the last 4 to 5 quarters, it has reported consistently. Both EPS has grown double to triple digits, and sales have also grown higher double digits. You can see average it is around 40 to 50% growth on every quarter. That is a very good sign. We are a growth based investors, right? We'll like the company to report numbers growing exponentially as well. On the other front, a number of funds have increased. That is, the number of funds invested in this company have increased 33% in the last quarter. Again, a good sign of institutional investors taking a position because they have liked the story. These institutions will definitely give support to stocks when the market is under pressure. Currently, the overall market is not so conducive. However, this stock has not reached its 200 EMA because institutional funds are having good chunk of the company in their portfolio, so they will definitely give support to stocks which are fundamentally strong. Coming to the question, if you are looking for a fresh position, it is definitely a no. Uh, Both the stock is trading below its pivot and the overall market structure is not conducive at this moment. However, if you are holding this stock in your portfolio, you should have exited when the stock breached its 50 DMA. That is currently it is trading 1% below it. If your risk appetite is higher, then if you are able to take more risk, then you can keep its 100 DMA, that is another 4% from here as a stop loss. But we are not advising to take a higher, deeper stop losses. As mentioned previously as well, as the magnitude of loss increases, your capital erosion will be higher. Uh, Lakshmi Organic, the stock, this stock has been asked more than twice. If you're looking for a specific query, that is whether to hold or sell, that means I hope you have this stock in your portfolio. Um, Definitely, the stock going with the market trend, it is going downwards, and the clear trend is on the down front. You can see the stock has been trading below its 200 EMA, which is a black line. We tried to reclaim that level recently. However, the market is not bullish, so the stock failed to reclaim, and currently it is trading exactly near its 50 DMA, just 0.9% above its 50 DMA. If you are looking for an advice to buy or to hold or sell, you are holding till the 50 DMA, so it is okay to hold for another 2% from here, because 100 DMA is there at 2% from the current market price. If the stock falls more than 2% from here, it is better to exit. That is our suggestion, because you are holding this stock, you can uh, take another 2% loss. That is what we feel. But it is not advised to invest in these kind of stocks which are trading below their key moving averages. Whenever you have taken position, by whatever reason, if the stock breaches key moving averages, that is 50 or 200 DMS, that is the time you should exit your position. You should have exited the stock at this particular point if you are taking position any part of this area. I will be taking another couple of questions, and then we'll be closing this session. Don't feel bad that if your question is not answered, you can write to us on email as well. We'll be taking some time to reply back our methodology as well. I'll take AU Bank. Again, similar story. Stock is a very good stock, fundamentally a strong company. Uh, EPS of 94 indicates that number of funds invested in the stock have also increased nearly 50% in the last quarter. Uh, these are very good pointers. The stock has also broken out from its stage 2D. However, due to the weak market dynamics, it has come down under pressure, and it also breached its key moving averages. This is happening in lot. Um, if you are looking for a fresh position, it is not advised at this particular point. again 2 pointers. Because of 2 pointers, that is the stock trading below its pivot, and market structure is not conducive both. If you are holding, it's better to exit at a current market price because it is trading below key moving averages. As mentioned previously as well, if you are holding any stock in your portfolio, the sell signal, major sell signal is that whenever stock breaches its key moving average, you should exit that particular stock. Yes, as pointed by Naresh as well, we have removed the stock from model portfolio as well.
Raj, can I take some quick queries? Like,
Yes, okay, and then we'll close this session as well.
okay, fine, fine. Can you give me the chart for Rolex rings? So again, a very fundamentally strong story. If someone has been tracking the stock for the last couple of quarters, you can see some good results coming in. And if you look at from the O'Neill perspective, it's probably satisfying most of the canceling parameters. But at the moment, a new entry into the stock is not advised. It's like 41% extended from the pivot. But if someone's already holding on to the stock, can keep probably the 50 DMA as your exit point at the moment, because currently the market is not conducive, and if probably the stock breaks down from the 50 DMA on an above average volume, can look to exit out of the stock. And probably it would be good, like one could be having still having had some gains within this stock. It's better to follow a risk management perspective and move out of the gains till probably the stock is in favor and in momentum. It's better to lock in the gains and move out. The other we'll talk about is granules. Uh, so overall, not a very conducive structure if we look at it in terms of price strength as well. Uh, in the last couple of months, the price strength has been improving. It's forming a flat base as well. But I mean, if you look at the off highs and even from the price strength, the stock it's clearly looking not in momentum at the moment. In the EPS front, it's still fine, and the buyer demand is fine, but this stock is lacking price strength. So if new entry uh, if someone's asking about new entry into the stock, first the market structure that becomes a no. To the in terms of satisfying most of the canceling parameters, even that is not happening with the stock. I mean, even if you look at it from the moving average perspectives as well. It did reclaim its moving average, but the stock is not in momentum. So probably can have a miss on the stock as well. The other would be PVR. Rashikar, your screen is not loading. Okay, still stuck.
Can you see now PVR?
Um, Not completely.
Okay.
Yeah, it's loading. It's loading. It's loading.
Okay.
Yeah. So even like if you look at it a little back, if you go near the cup base that it is forming, and then the breakout that it probably provided, then some negative news struck with respect to the merger, plus and some negative news on the social media as well in terms of new movies not getting the desired footfall. So probably the stock did came under some kind of pressure. But if probably the for following the risk management perspective of feel of 7 to 8% stop loss could have exited at that moment. Again, you would have got chances exit around the 50 DMA. And personally, as even Raj and from the O'Neill perspective as well, risk management is highly important. And I mean, the more the deeper the stop losses you take, the difficult it becomes to probably regain that capital and break even. So it's always good to cut down on your laggards, to cut down on your losers, and to ride on to the leading stocks. That is your winners. Raj, do you want to take a couple of stocks and then just wrap up the session? We already crossed the 5:30 mark.
Okay. I'll take two pages and I'll close this session.
Okay, fine.
I'll take Tejas network. So very good stock which has been pointed out by user here. When the market is in a downtrend, this stock has clearly outperformed majority of the stocks in the market. The stock has broken out from its stage 4B base pattern, which is considered a late stage in our methodology. You can see the spot of momentum happening in this area. Look at the volumes front as well. Huge volumes have come in. That indicates uh, good institutions taking fresh positions. You can see number of funds invested in the stock have increased nearly 10% in the last quarter. Even though the market has been falling for the last 7 consecutive sessions, this stock has closed on the higher end for the last 3 sessions. That is clearly very good sign. The market is going downwards. This stock is resilient and closing in the green. That indicates its outperformance. This is a scenario when market is in downtrend. When the market structure changes and the market status is changed to confirmed uptrend, definitely this amount of gains, which is 2% gain, will definitely move to 5%, 6% in an intraday basis. Coming to one major pointer, that is EPS strength being poor. That is EPS strength is just 7. That is majorly because of declining its sales. Company has reported for the last 3 quarters, sales have deteriorated consecutively, and EPS front also it has reported negative EPS, that is losses. That is also a major reason for this EPS number being at lower category. However, the market participants are bullish. They are expecting the company to report good set of numbers in the coming quarter. That is the reason the stock is trending higher. However, we will definitely will be taking a precautionary step while taking a position in this stock because of lower EPS. Definitely will be having more discussions among our team. Mostly, it will be a no to our model portfolio. Only if the end factor, that is a new thing that is happening in the company, if the strong end factor is there, then only we'll be taking a fresh position. That is there might be some end factor which is in the related to this company in the market. That is a reason the stock is rallying high. I'll take LT Foods and then we'll be wrapping up the session. Sorry. Again, I think most of the users are just pointing out stocks which are uh, trading their all-time highs or which are resilient in this market structure. Kudos to everyone who are pointing out stocks which are resilient. Uh, this is the kind of research one should do when the market is in downtrend. You should always watch out for stocks which are trading above the key moving averages, trading near their all-time highs, off highs lower than the general market off highs. Because when the market structure changes, these stocks will definitely move outperform the general market. and always keep these stocks in your watch list. And when the market changes, status is changed to uptrend, these stocks will definitely be outperforming and will be giving breakout signals way early when compared to the market. So rather than missing out of these stocks, if you have kept these stocks in your watch list, you'll be getting a good entry position, and you'll be able to make good returns in a quick succession. Coming to this stock has been a major outperformer recently. You can see the RS line has been hitting blue dots, that indicates RS making new highs. RS of 83 indicates a strong technical character. Buyer demand, that is A by D rating, is B plus, indicating good demand for the stock in the market. EPS strength of 88 indicates strong fundamental character of this stock. Everywhere, both the techno fundamental characters are looking very good for this company. Mm, the only concern is that overall market is not conducive for fresh investments. However, if you have this stock in your portfolio, you can continue to hold it and keep a tight stop loss around this low, that is 106 or 105, so that your profits will be safeguarded. Thanks, everyone. I think we can we'll be able. I think we can close this session now. I hope most of the queries are answered, and also we tried to explain a methodology uh, by taking a few stocks. I hope it was a good learning experience for everyone here, for you, for me, and for my colleague as well. So we'll be trying to bring forth our methodology in our webinars and with our podcast, which we do on daily basis, pre-bill, after hours. If you have time, you can always join those sessions as well. You will be getting more analysis in depth related to our market structure and our analysis towards the market. Uh, if you have any unanswered queries, write to us on email. We'll be taking time to answer your queries as well. Thanks everyone again. I'll be closing this session now.